What's happening, guys? We've got another Sunday scan coming at you for the first week of March. Last day of February, first week of March. I feel like things are flying by. I feel like we just did January, we just did February, and we're already into March. Pretty soon it's going to be June, July, August. I'm not rushing away the weeks, but point is it's happening fast. So if you didn't make those changes November, December that you had planned for the new year, now's the time to reevaluate. How are you doing with the changes that you were thinking about making, the changes that you had planned to make? And if you haven't got there yet, now's the time to rezone in and make those changes before it is mid-year, before it is the end of the year. Because as you can see, the months are starting to kind of go quickly. So that said, I think it's pretty important to mention, it's a crazy time right now. And obviously we all as traders love volatility, but I prefer it to come from something like interest rates, COVID type stuff going back and forth, or something like inflation concerns, right? We don't want to be excited about an invasion of Ukraine to get volatility in the market. It's unfortunate, and I do hope that anybody that is involved is safe. I know we have a lot of members from all over the world. I'm sure we have many from Ukraine. And so I just wanted to let you guys know that we're thinking about you, and hopefully we get a resolution soon, because it's not good for anything. And like I said, I'd rather get volatility from, everything else, but not war. So let's get prepared for the week ahead, but let's hope that, this weekend and the week ahead has some type of resolution, and things start to calm down a little bit. Each week on Sunday video, I feel like we've been hitting the nail on the head as far as preparation, right? It doesn't matter what you trade, how you trade, but it's about how you prepare and what to look out for, what's working, what's not. And I feel like the conversations that we have each week end up unfolding that following week. And it's been many, many, many Sundays in a row that I felt like that. And it's just because we're talking about what's happening in the current situation and changes that I'm making, how to adapt. Because the biggest thing about the last 3 to 6 months is that ability to adapt. If you were not able to adapt, then you're not making any money right now, and there's a good chance that you're losing quite a bit. So I'm going to go over a few of those things today again, and then we'll get right into the video for the week ahead. First and foremost, as you guys know, all you have to do is leave a comment in the comment section. Key takeaway with the timestamp. Like the video and you're automatically entered for t-shirt or Icon Meals, scans, etc. I'm wearing Icon Meals this week. Got the right side. Sometimes you go to the wrong side. Icon Meals this week, and the winner for that is Nick Charnley. Hopefully I get that right. I tried it twice. But this is for US only. So if you're not in the US, then we'll send you some t-shirts, and we'll pick another winner next week. But obviously, like you guys know, Icon Meals is what I do every single day. Consistency is important. Consistency in trading, training, working out, and eating. Then t-shirts, Techniques Pro, and Robert Zotter. You've got the t-shirts for this week, but I've also added Cam Black Bear. He is a member, and I was really blown away at his dedication last week. So for the first time, whenever I press record for my morning broadcast, it records over itself so that I don't have 900 videos on my computer. So I pushed the wrong button, and so I was unable to upload the broadcast on Friday morning. And so anyway, he takes notes every single morning. He has this whole spreadsheet preparation of what his trading ideas are, what he's looking at, key levels, thought process, kind of doing his own scan like I do on here. And then he adds in my notes from the broadcast, and he had just posted it for the room, and I was blown away by the work ethic. So I wanted to show my appreciation for his dedication to this craft by sending him a bunch of shirts. So send me your address, webmaster@investorsunderground.com, and we'll shoot them out to you as soon as possible. Video topics, then versus now trading. I'm not going to beat a dead horse. As you guys know, last 3 to 6 months, totally different. So one big issue that I've seen, I've been talking to a lot of people, a lot of COVID meme style traders that were doing exceptionally well, getting rewarded for buying the dips, getting rewarded to buy breakouts, you name it, everything kind of setting up for this disaster. Then you discover margin, then you discover averaging down, then you discover all these things that just are not good. And then you have an outlier gap down day that forces you out on margin, and that's it. That's your trading career. So, I can't offer financial advice. People always ask me, what should I do? You think I should get out of this? You think I should hold this, hold that? The biggest thing that's helped me in the past is to be able to take control. Take control of your future, take control of your trades, right? So if all of your money is in 3 names, then your success is dependent on what those trades do. It's not about you anymore. It's about what those names do. So you're never really going to find out if you actually are good at trading, if you're always dependent on whether this thing upticks or downticks, right? So just think about that. The only way to take control of it is to either be on the right side of the trade, be in for the right reasons, or be cash and waiting for the next trade. So you guys have to do what you guys do, but just know that being in control is my game. That's what I want to be, and if you are always dependent on the market and dependent on which stock upticks or downticks to be either happy or sad, on the day, then it's not fun. And, it's going to hurt a lot of relationships. It's going to make you really upset. And the sooner that you can take control of that, the better. And it's the worst, the hardest thing to do to move on from a really, really, really bad trade. But I can tell you this, it's the best thing. And then you'll see that, everything else kind of open up. You'll become a happier person. But if you're always dependent on those 3 names, whether you're successful or you're not, whether you're happy or sad, it never ends well. So just think about that. If that's you, I know there's a lot of traders that are in that boat. Give yourself the best shot. If you believe in yourself and you know that you've had success in the past, then why are you strapped down to a handful of names to either make or break you? So Russell names, we had a lot: RUSL, YNDX, a bunch of different names that offered some really good opportunities on Friday. The one thing that's been working, and we talked about it on AFRM and RBLX, we always want that kind of gap up for the unwind type day. And the thing about these gap ups is it's almost like marketing, right? You see something going up, and when you look at it at 18, you're like, yeah, maybe I'd consider buying at 17. But 19, 20 seems a little expensive. If they walk it up to 22, all of a sudden 20 seems like a deal instead of expensive. And 19 seems like a deal instead of expensive. All along, they're just creating this liquidity to go ahead and sell it all day long. So that was the idea with YNDX and RUSL. And obviously, you want to focus on the one with more relative weakness, which clearly was YNDX. But just thinking out of the box, are they running it up pre-market on low volume? Obviously, you don't want to jump in front of it and scale and think that no matter what, you're going to be right, because that's how you get smacked around. But think about this whole marketing concept. They're marketing the idea that higher is good because dips are then bought, and it creates liquidity. There's a lot of people stuck on the wrong side. Stocks are down 50 to 80%. Be cautious. IMPP, swing. I'll get into this a little bit later on the video, right before the scan, but it is a setup that I absolutely love. They're rare. but you've seen me continually go back to these trades. I can't think of more than a couple maybe off the tip of my tongue for the type of trades, what it relates to, but I will show you one and the concept as to why it interests me. And the last couple things, this market is fantastic. A lot of people will disagree. And the reason for that is because of the failure to adapt. This market could absolutely make you or break you. But I want to remind you that just because you've got the best call in the world, just because it appears like you've absolutely crushed it, I'm having trouble with absolute conviction in this market, right? I don't want to be on the wrong side of the trade and then just have it go nuts against me when I have size. So it's been great. And, typically I outperform in volatility, but it's just been more of a consistent nail versus having these huge outlier type trades. And I think the reason for that is just because I don't have the conviction, given how thin the tape is, to really take on an outsized position unless it's something like UVXY, VIX, Facebook, and things like that. So that said, I was positioned on AFRM and RBLX and short in the VIX on Thursday. Had absolute 100% perfect call. Long pre-market, RBLX, AFRM, Facebook, short VIX, UVXY pre-market, and scaled at the open. Volatility went down, Facebook, AFRM, and RBLX went straight up. And I sat there and I said, you know what, man, that was a good, 10-minute type trade. I absolutely crushed it. And I second guessed it because it was straight up. And I was like, there's no way that it's this easy. And they've got to shake out everybody. They've got to work people out. And so I'll go ahead and sell. I'll fade it back some, just because it's gone up too much too fast. And there's no way that they're just going to let everybody that bought the dip just absolutely bank. So I took my gains, went short, and then proceeded to give some of it back. I never scaled short, but I moved on. And unfortunately, I fumbled what was probably the potential for a top 10 kind of career type day. So the point here is that no matter who you are, what you're doing, no matter how good of a read, I had the absolute best gold read on this trade. And it's trade setup, and I absolutely fumbled it. It was a good day. It was a good trade. Don't get me wrong. But the potential and the difference between what I captured and what I could have captured, it's just absolute, complete. It's a major difference. So understand that. And not everybody's killing it. Not everybody's performing 100%. Not everybody is doing exceptionally well right now. And if that's not you, if you're having trouble, that's okay. Wait until you're comfortable. The worst thing you can do is jump into something, be uncomfortable about it, and then lose on top of it. The last thing that I want to talk about was this failure to adapt. And I just see it so often. I have so many conversations with people, and then I see them go right back and do the same thing again. And it's as if, one, the conversation never happened, and two, they're expecting some sort of different result, right? And it's just, you talk about it, goes in one ear, out the other. They get it, they understand it, but when they're faced with that situation, when they're faced with the trade, when they're faced with that decision, they make the wrong move every time. And they have that FOMO, I want to be part of this, I feel like I should be part of this. And they don't make the change. Remember that it's on you. It's not just about soaking the information, it's actually making the changes, right? We all know how to get six-pack abs, right? So you know the exercises to do, and you know how many times you need to do them. But it's all on you whether or not you're going to actually follow through. And even if you did follow through, if you don't diet right, then it's not going to happen. And the same thing, trading is no different. If you're going to hear all the things that you need to do, and then be like, this time I'll skip that. I'll skip this. I'll skip that. Yeah, I'm doing these two things, but that one doesn't matter. Then you're never going to get there. You're never going to get there. You have to make those changes. You have to follow through. And if you don't, you will not get there. And I'm just seeing that so often. It's just so easy to not do, the exercises. It's just so easy to not diet right because it's more convenient. And, maybe you get there, maybe you don't. But I can assure you that if you don't do the proper exercises and follow through and only let it go in one ear and out the other, you will not succeed in adapting in this market. So, the good news for us is the volatility will continue because we've got this overshoot to the upside now. As always, never underestimate the bear market, right? The bear market round. So, you've got all these shorts on the wrong side, unwinding to the upside, all these longs, probably bailed at the lows, chasing it back up. It's just going to be like this for the next 2 to 3 months, in my opinion. It's as if nothing, COVID, the interest rates, inflation, all that stuff was all front and center headlines. And this is why the market's coming down. And all of a sudden, Ukraine and Russia headlines take over and nothing else matters. So it's going to be interesting to see how this plays out. But it just goes to show you that the obvious trade is never the right trade. Well, sometimes it is, but until it's not. So stop thinking that you know best and just be a trader. We're still in a trader's market. If you have too much of a bias and you're wrong, you're going to lose in this market. So anyway, let's get into Sunday video. Topics or scan for the week ahead. All right, guys. So first and foremost, I said I was going to talk about IMPP. So we'll get into that. But I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If it's not okay with you, turn it off. If it's good with you, then keep watching. Once again, these are my ideas, my thoughts to help you improve as a trader, kind of get you ready for how to make a proper game plan, how to prepare for the week ahead. Like I always say, if you want buy or sell recommendations, go somewhere else. Plenty of people that will tell you what to buy and sell online. But at the end of the day, if you do that, it's a hobby, obviously. But for IU and for what we do, my goal is to make career traders. So IMPP. So the thought process behind here, this particular trade, is much like WATT. And I've done a video, it's been on YouTube a while, kind of explaining why I took a particular trade way back when on Watt. And it's just one that always comes back in my mind when it happens. And you can see it's right over here. Whoops. If I can get there. Happened multiple times. But you can see how this volume kind of breaks down, and the volume is under, 500,000 shares most of the days. Then all of a sudden it gaps up and it has 40 million shares. And so the point here is that people look at the fact that it went from basically 440s to 6, right? It's gapping up 50%, and they say, whoa, that's up too much. That's definitely a fade. Meanwhile, we're only back to, maybe 2 or 3 days prior. So all of a sudden, all this inventory comes out on the short side thinking like, well, this thing's ran too much. It's obvious that it's going to fade, and people get on the wrong side early. And so very, very similar over here on IMPP, we had a very, very similar setup that we've seen before on Watt, as well as many others. But you can see over here, they had done the raise this day. I think it was 9.6 million shares at 125 plus 9.6 million warrants at 125, which, once again, is a great reason for a lot of shorts to come in the 120s, right? So what happened is we've got this fade from basically, the 125 level down to 50 cents. And if you look at the volume associated, it's literally, less than 1 million shares the last couple of days. But for the most part, 1 to 1.5 to 2 million shares. And that's tiny. That's tiny volume on such a low price type name. All of a sudden, we've got a huge day, 114 million shares. Next day, 162 million shares. We're already back to that 125 level. So anybody that sold, into this raise day, they are bailed out. Anybody that's shorting at 125 thinking that the warrants are going to hold it down is now on the wrong side. They have not taken into account the fact that we've already cleared out that day, 105 million. We cleared it out the first day, cleared it out again the second day, almost 2 times now. And then the trend actually holds over that, what should have been the top, right? Anybody that's fundamentally shorting this is hammering it, thinking that the 125 level is going to be the top. All of a sudden, it should have died, it holds, and here we are, it starts to hold. There was 2 or 3 days in a row where it looked like that was it was over, and it ended up holding on. And so that's why I went ahead and let that trade work. Idea was the first day at 74 cents into the VWAP level. I always like to buy weakness on a trade like this. If it's ramped up in the morning, failed, and starts to kind of hold on, I always like to take a chance at the potential of that one push, just because psychologically people see 75, 80 in their mind. As soon as it clips that 85, 90, nobody's thinking about selling. They're thinking about the dollar break. So that's the initial thought process. When I got long at the 74 to 80s, I ended up with a 79 average. But then based on how it was working, I even talked about that on the scan. And in the room, a lot of inventory at that 125 level. All of a sudden it holds. Now everybody that was taking this no-brainer fade is stuck. And we'll see what happens, but this is definitely one of those types where this is actually, it's not a tiny float by any means, but compared to the volume, it's a pretty low float. So it's going to be interesting to see if there's a lot of, many, many, many millions on the wrong side of the trade. And if there is, then we can have one of those 350 to 5 outlier type trades. That said, I'm speaking, like I said on Scan all week, I'm speaking from a 74 to 79, 80 cent average. I am selling into rips. So, the moment that this thing fails, the moment that this thing exhausts out, I'll be looking to, exit the rest of it. So by all means, I'm not exceptionally bullish at this stage, given the fact that it's already tripled since my entry. But I do think that it has the potential of that outlier action. And that's what it's about. Most of these will fail, right? When we talk about outlier moves, most of the outlier moves fail, but it's the one that gets away that's the black swan, right? And so if you're always holding and hoping for each one to be the black swan, then you're probably going to fail over time. But the point is that when you do have a potential, when it's setting up, it's checking all those boxes, I always like to let some work just in case. And this is one of those situations. Let's jump right into scan. IRNT, fantastic trade. This has been on scan for a while for the long. I missed this secondary move, but we talk about the liquidity traps literally every Sunday. You saw it right here. You had the volume, 68 million, consolidated, and then it busted through those 450s. You can just draw a line across to, make it easy. Why would I care about that 450 level? Obviously it peaked out a little bit lower this first day, but the fact that it busted through this prior top should, alarm you like, hey, it's go time if 450 starts to base a couple times, and then obviously I had the breakout. Again, that's in hindsight. I didn't take that breakout, but you've seen the setup. I'm showing it to you again. You've seen over and over and over every single week these trades play out. I went over it last week as to why I trade particular names, etc. So there's nice breakout. Fabulous fade into the close. I mean, this worked out perfectly. We're talking about the lines all day. You can see basically the 680 exhaustion level, or excuse me, 680, 685 range. You can see, just draw a line, make your life easy. And 625 is the other level that we talked about, right? And make your life easy. Draw those lines and let everybody else exhaust them. As explained in the room, BKKT. We just had practice with this setup. Literally, just had practice with this setup. You don't want to jump in front of it with size expecting that you're going to be right, because there's options involved here. It always hangs around longer than you think, but same kind of opportunity where there's a huge opportunity to scale, huge opportunity to size into this particular trade. And it's just about taking the trade rather than being a hero and trying to get the whole thing. And if you were trying to be a hero the entire day, you probably got squeezed out. So in this situation, the reason I compared it to BKKT is you can take on size as long as you're covering into the flushes until it falls off people's radars. And then, like you saw on BKKT, once people stop caring about it, you've got another nice opportunity to the downside. The difference is it's harder to trade with a lot more size just because of the liquidity. So for me on IRNT, I am hopeful that we get 620, 650 blow off again on Monday and then fade off while people are looking at other things. YNDX, higher the better. We'll see what this one does. I would be hopeful for some type of pop up towards prior levels. Ideally, 2050 to 21 blow off and then start to fail to follow through. Won't be able to trade as much size as the last 2 days. I would expect the volume to really start to come in, but reactive trade, very clean setup, very clean trader on Friday. So hopefully we have more of the same of that. I will go over key levels in the room throughout the day as always, but I would have some of the other Russell names up there as well just to get a good feel for things. FL's got some nice rally. What I'd love to see is some type of gap over this 29. It's going to be dependent on the market, obviously, right? So if we're going to be gapping up 500 points on Monday, then obviously this thing's going to probably gap up. If we're gapping down, we'll probably gap down. But I'd love to see some type of blow-off move. In a perfect world, it would come into this sort of channel where it pretty much rips 30 to 31 and then settles off. I would compare that to the RBLX trade that we went over last time and AFRM, where morning shove, fails, lower highs, that kind of action. So I'd be looking for that morning rip, pull back, consolidate, fail at VWAP, and then steady fade throughout the day. So that's what I'd be looking for on FL. We'll see what happens, but that's what I am prepared for. AMC, I feel like it just squeezed out everybody at the end of the day. It's been a great trader. Once again, it's one of those where it's a trader, right? If you're trying to be a hero and trying to let this thing work all day, more often than not, you're going to be disappointed. So don't be afraid to take those gains when you have them, or cut the loss if you're wrong. If you started to resize in and starts to rally, if you fight this, you're going to get back a lot or you're going to lose a lot. So it's a trader mode. Don't be a hero trying to get the whole thing. ISPO, a lot of blow-offs. People just afraid of circuits. When it pops up, everybody gets afraid. They're going to go into another circuit, so they try to cover it. Nice opportunity. I would love to see some sort of blow-off into this 59, 60, range. Pretty much up to the 60 range, I would love. 60, 62. It was a nice opportunity. I fumbled along. I should have had some price alerts to be staying focused on it, because that was a pretty clean move, went straight up and would have been a nice double. But clean on the exhaustion moves. You can see the nice exhaustion move and fail. It came in obviously, and that was that. Not a favorite trade. It's a thin name, so if I trade it, I'll trade it within means, but I'm not going to get aggressive on this thing just because I've moved on from that. I don't care about that kind of stuff when we have so many other names that you can really sink your teeth into and not worry about the liquidity risk. You can see this newsletter type action. You can see this blow off. This should be a nice, clean, obvious setup to you, right? There's no edge over here, but there's an edge after the open, especially if they stuff through. So this is an essential goalie pull that we go over all the time. You can see the highs over here. You can see the other kind of highs that were being put in over here. So any push through the open that's met with some sort of stuff move, they essentially pulled the goalie, let everybody cover, and then bam, right back down. So that was a nice fade for me. It did come back So ideally in the morning, we get some type of retest, 420s, 410, 420s, and then fail off when nobody's looking. This will be one of those that I like to keep on radar, back radar, CYRN, same deal, INDO, same deal. Higher the better when nobody's looking, and then ideally fade off. So those ones I actually think might all gap down. If they do, I'm still interested. But if they don't, let them do their thing and then look to come at them, in my opinion, just like we talked about in the room on Friday and Thursday. Let everybody else pay for the information. There's no reason in this market for you to get in there and exhibit risk on the front side when it could be super, super thin. Let's look at CYRN. Anticipating that top, right? Anticipating that it's going to break down, you get popped every time. Let everybody else do it. Let them exhaust out, come in. And remember, if it starts to hold the base, you don't need to be a hero in this market. Bases curl. So you want to be cautious of that. And if they don't curl, you can always re-add in. You can always re-add after you cover some. Remember that. You can always rescale into a winner after you cover some, after you lock some in. More often than not, in this market, you're going to be happy that you took some off. That's it. See you guys in the room tomorrow. Thanks for watching. As always, give a like, leave a comment with a key takeaway with the timestamp, and shirts, scans, icon meals, IU. We give it all away. See you tomorrow.